Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. One of the main trends in investing in recent years has been the growth in ETFs, or exchange-traded funds. Now, a report from BetaShares suggests the local ETF industry will reach more than 2 million Australian investors this year. Alex Vynokur is the CEO of BetaShares. Alex, welcome back to Fear and Greed.
Great to be with you again, Sean.
New year, good time to have a new lesson about ETFs. Just a 101 on what an ETF is and how it works. That's for those listeners who aren't familiar.
Absolutely. An ETF stands for an exchange-traded fund. Exchange-traded funds combine the flexibility and convenience of buying or selling a share on the ASX with the significant benefits of cost effectiveness and diversification. In other words, it's a great building block for Australian investors as well as investors from around the world to build their investment portfolios and over time, of course, build their wealth.
And one of the great things about ETFs is that diversification part of it, isn't it?
Absolutely. ETFs do all the heavy lifting for investors in combining that cost effectiveness with diversification. So if I was to use an example of, say, the BetaShares NASDAQ 100 ETF NDQ, in one trade on the ASX, in other words, as simply as buying a share on the ASX, investors receive ownership proportion in each of the 100 stocks, basically, that comprise the NASDAQ 100.
We should have had this conversation a week ago, Alex, because if you told me that and I went out and bought a week ago, I reckon that ETF would be up pretty well in the last week.
Of course. Look, over short term, shares and ETFs and funds, of course, can rise and fall in value. And we certainly talk to our investors a lot about measuring the success of their investment over a long period of time.
Yep.
In the short term, things like volatility can influence the value of any investment. But long term, if you allow the magic of compounding to do its work, and I'm using a term here which is really borrowed from, I think, Albert Einstein, who talked about compounding being one of the undiscovered wonders of the world. And ETFs certainly make that very accessible and very convenient for Australian investors, of which there are almost 2 million now, and of course, millions and millions of investors from other parts of the world.
Okay, so you're forecasting an additional 275,000 Australians to invest in ETFs this year. That means the local market will hit about $180 billion in funds under management. Why do you think people are flocking to ETFs? What's behind the growth?
Well, look, I think the magical power of ETFs is that they deliver exactly what they say on the tin. So when an investor makes an investment decision, and say, for example, you are in your 20s, you've got a long-term horizon, you can afford to take more risk in your investment portfolio, and you want to construct a portfolio which is tilted towards growth. The Australian ETF market, and I'm not just talking here about BetaShares, I'm talking about the industry more broadly, has a phenomenal array of exposures. Some of them will be core exposures, in other words, established leaders in various industries. So we talked about the NASDAQ 100, companies such as Google, such as Amazon, and of course the list goes on and on. And then, of course, you can tilt your portfolio, say, towards growth if we're talking about somebody, for example, who's young and has that longer time horizon. And they can invest in themes, for example, such as clean energy, driverless autonomous vehicles, cybersecurity, and the list goes on and on. So I think the beauty about ETFs is the simplicity of access and the fact they're transparent and they deliver exactly what they say on the tin. So if you happen to be one of the investors who really is interested of what's in your portfolio, you can go onto the website of BetaShares or any other ETF issuer. You can look up the fund and see exactly what's under the bonnet.
Yeah, okay. So who do you think, all these hundreds of thousands of new ETF buyers, do you think that'll be new investors to the market mostly, or do you reckon it's actually experienced investors kind of deciding that ETFs are the way to go?
Great question, Sean. Look, what we've seen over time, and BetaShares has been in operation in Australia now for 11 years. So we launched our initial ETFs in December 2010. And what I have seen through that 11-year, sort of time window is that the early adopters of ETFs have actually been the wealthier, more experienced investors. Yeah. Quite often have been the SMSF trustees, people who've set up their own self-managed super fund, and people who've got more investment experience. And in many ways, investors who've learned that over time, the best way to build wealth is to allow that compounding to take place. And of course, there are no shortcuts, in building wealth. I mean, we certainly at BetaShares are big believers that building wealth takes time. I mean, there's lots of sexy and otherwise appealing, sort of investment exposures being in the area of cryptocurrencies or whatever else. But of course, that all comes with risk. And any investment, of course, has risk. But I think the benefits of diversification, the benefits of cost effectiveness and an ability to build a portfolio that allows you to meet your investment objectives over time really put ETFs in its own category. And I think that ultimately is the reason why we're seeing so many Australian investors go towards ETFs. So back to your question, the early adopters were the experienced SMSFs. And over time, what we are seeing is that ETFs are continuing to democratize wealth creation in Australia. I think what we're seeing today is that we are living in an era where interest rates are at record lows. And obviously, they'll stay low for the foreseeable future, even if the RBA raises interest rates a little bit from the current levels. We're seeing housing continuing to be unaffordable for so many Australians. I mean, for the vast majority of young Australians, housing is really out of reach. But at the same time, of course, everybody wants to get ahead in life. Everybody wants to build a future. And I think ETFs have played and will continue playing, in my opinion, a very important role in democratizing wealth creation.
Stay with me, Alex. We'll be back in a minute. My guest this morning is Alex Vynokur, CEO of BetaShares. So ETFs are much more of a retail product than an institutional product. Do any of the big fund managers buy into ETFs very much?
Absolutely, they do. So I've got several really interesting anecdotes, I guess, on that score. First of all, and unfortunately, I'm not at liberty to name names, but if you were to look at a list of some of the more prominent fund managers, active fund managers, quite a lot of them in their own sort of superannuation funds or in their own name invest in ETFs. And this is the case in Australia as well as overseas. That's number one. And number two, we're actually seeing a large number of professional superannuation funds as well as insurance companies. So we're talking about large institutional investors allocating more and more of their capital towards ETFs. So I think the latest stat, for example, in a market like the US, is that 8 out of 10 largest fund managers in the US utilize ETFs regularly in their investment portfolio in order to try to generate outperformance or alpha in professional speak.
Yep.
And then if you look at some of the largest endowment funds, some of the largest pension funds and family offices, they regularly feature amongst the top ETF investor. And again, if I was to go back to our old friend Warren Buffett, he has been quoted on a number of occasions as saying that, for his family and the next generation of his custodians of wealth, he wants to advise them, or he's advising them to put 90% of their assets, index exposures, ETFs, and 10% in cash for the rainy day.
Yeah. Wow. Look, I mean, I'm a fan of ETFs, and I kind of, particularly for an investor like me who is not sophisticated enough to actually know what's going on within a company, wants to spread my risk long term, all that's great, right? But there are risks to ETFs. You can pick a mega trend, which actually isn't a mega trend, for example.
Of course. Every investment has risk. I think on the topic of megatrends, Sean, what I would say is that a genuinely well-built ETF will certainly provide a pure play exposure and the right exposure to a long-term megatrend. Now, what's going to happen in the short term, of course, nobody knows. You know that every investment carries risk. You're absolutely right in pointing that out. And we do so very regularly for our clients, of which, we have hundreds of thousands as well in Australia. However, at the same time, long-term fundamentals drive the performance of the investment. So short-term, it could be fear and greed, as your podcast is quite rightly named. Fear and greed absolutely have influence on the dynamics in the short term. However, long-term fundamentals certainly do, prevail, and they do play out. And when we look at some of the genuine long-term thematic exposure, be it clean energy, be it cybersecurity, be it autonomous vehicles, robotics, AI, I mean, these we certainly believe have decades of significant growth ahead, not just several quarters. And that's why, from our perspective, some of them can make really good long-term investment exposures.
And I've got to ask you about the BetaShares Crypto Innovators ETF. I think we spoke about it last October.
Yes.
What I liked about that one was it wasn't necessarily investing in the cryptos themselves. It was as much about the technology in the back end of it. How's that gone? And I mean, it's sort of only 3 months, but it's been a really tough time for cryptocurrencies.
Yes.
But, you're happy with that ETF?
Look, absolutely. Crypt has delivered exactly what it plans to deliver, which is exposure to innovators in the crypto industry without the direct ownership, of course, of cryptocurrencies. We have seen, as you pointed out, over the last few months, quite a significant decline, of course, in the value of cryptocurrencies themselves. And of course, just because, those companies operate in the same industry, it affected a number of companies. So, for example, if we take Coinbase, which is the largest constituent. I mean, Coinbase as an exchange, of course, is significantly diversified beyond just the value of cryptocurrencies. However, a negative sentiment towards cryptocurrencies will impact the value of that investment. So long term, we are certainly of the view that the companies in that ETF will continue providing that sort of exposure and will grow. But as we said just now, over short term, fear, greed, and other factors will definitely impact the value of investments.
Alex, thank you for talking to Fear and Greed.
Great to be with you again, Sean.
That was Alex Vynokur, CEO of BetaShares. This is the Fear and Greed Daily Interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.